Adcock Ingram has produced healthy annual results. The pharmaceutical manufacturer has posted a 6% rise in total turnover for the year to end June. That's thanks to improved demand for the group's winter products as cold and flu cases increased. Headline earnings per share rose 10%, and a final dividend of 275 cents per share has been declared. That's up 10% from the prior year. Looking ahead, the group is optimistic about the government of national unity and the improving economic outlook. Both bode well for the company in the long term. Sibanye-Stillwater's lithium project in Finland has secured a €500 million cash injection via a green loan package. The miner says the facility is the final capital expenditure needed for the construction and development of the project. The firm expects the venture to produce up to 15,000 tons a year of battery-grade lithium hydroxide. It's aiming to start production from third-party ore next year, and with its own ore from 2026. The miner and refinery in Finland is expected to play a key role in helping Europe reduce its reliance on China for the key battery metal for electric vehicles. That's as the EU now requires all new cars sold after 2035 to have zero carbon emissions. Cashbuild has warned of a profit slump. The building materials retailer expects full-year headline earnings per share to fall as much as 30%. The group has been under pressure due to the constrained economic environment, which has weighed on consumers' disposable income. Cashbuild will open its books on the 4th of September. A probe's been launched into the controversial deal between Equator Holdings and Central Energy Fund subsidiary Petro SA, and disciplinary action could follow. That's what the CEF told MPs this week. During a workshop with Parliament's Minerals and Petroleum Resources Committee, numerous CEF executives briefed MPs on the activities of the group and said the board had not approved of the deal, which aimed to refurbish Petro SA's offshore gas infrastructure. DAMP Kevin Malhams has previously stated that there was irrefutable evidence that the granting of the 21 billion rand tender to Equator was irregular. Further afield, Ford Motors said it was killing a planned three-row electric SUV and pushing back a new electric version of its best-selling pickup. The F-150. With this, the U.S. automaker is focusing on cutting costs to stimulate demand. Let's take a look at this package report for more insight on the plans.
Ford announced more cost-cutting measures as its EV unit continues to bleed. It's now scrapping plans for a three-row electric SUV and pushing back a new electric version of the F-150, its best-selling pickup. Consumer concerns around pricing and charging infrastructure have slowed demand for EVs, prompting several automakers, including GM and Tesla, to delay or cancel new models or slash prices. Ford's near-term strategy will now shift to a focus on hybrids. The company will also double down on areas where it currently remains strong, pickup trucks and commercial vehicles. But EVs are still a long-term goal. Ford says its Ohio plant will start production on an electric commercial van in 2026. CEO Jim Farley has also said he's staking the company's future on a specialized team in California that's been developing an architecture for affordable EVs. The first vehicle based on that new technology will be a mid-size electric pickup released in 2027.
And China opened an anti-subsidy probe into imported dairy products from the European Union, stepping up tension with the bloc a day after Brussels published its revised tariff plan for China-made electric vehicles. Let's take a look at this package report for more insight.
Trade tensions between China and the European Union rose once more. Beijing announced it would open an anti-subsidy probe into imported dairy products from the EU. It comes a day after Brussels published its revised tariff plan for China-made electric vehicles. The EU said Tuesday it would impose duties on imports of Chinese EVs to 36.3%, slightly down from initial plans. Beijing had called on Brussels to abandon the plans and vowed to take all necessary measures to protect the country's firms. China's anti-subsidy investigation of dairy will focus on various types of cheeses, milks and creams aimed for human consumption. Beijing said it would examine 20 subsidy schemes from across the EU. Ireland is by far the bloc's biggest exporter of dairy products to China, having sold $461 million worth of goods to the country last year. Data shows the EU was China's second largest source of dairy products in 2023. The EU exported $1.84 billion in dairy products to China last year, according to official data. China already launched an anti-dumping probe into imports of EU pork in June in retaliation against the EV tariffs.